Hi, and welcome to Accounting Academy. I'm Fitz, and this is my dog FIFO. We love to help people learn more about accounting, so join us on our adventures as we dive into accounting topics. On today's adventure, we are going to be helping our friend Lane. She owns a dog collar manufacturing company that is growing rapidly. They just moved into a new facility and are considering abandoning the lease for their old building. So let's go. Hey Lane.
Hey Fitz, so good to see you. You too, FIFO.
FIFO loves your collars. He never leaves home without it. We heard you have an accounting question. What is it?
Yeah, business is doing really well and I can barely keep up with demand. We're doing so well that we decided to buy this new larger factory.
Wow, that's great to hear.
Yeah, but now we're stuck with our old smaller building that we lease. It's a 10-year lease for $1,000 a year and we are in year 5 of that lease. The move to the new facility is slow, but we won't be fully out of the old building until year 6 of the lease. At that point, we plan on abandoning the lease.
Okay, so year 5 is your decision date, and year 6 is going to be your CCU state, which leaves you with 4 years you actually plan to abandon.
Yep, that's correct.
Okay, well first, I want to make sure that there are no plans to sublease the property, or only partially abandon the lease. This is because under ASC 842, this is considered an economic benefit from the use of the actual asset, and therefore would not be considered an abandonment.
No, we don't plan to sublease.
Okay, well the first thing we want to do is look at the health of the overall company, or at the asset group level. The abandonment of a lease is usually a good indicator of an impairment, and while ASC 842 doesn't have impairment guidance, we would look to ASC 360 guidance for impairment test. The impairment test would be done at the asset group level, and any impairment would be allocated to all assets, including your right-of-use asset.
Well, the lease services the whole company as both our old offices and the original manufacturing site. And in our case, the asset group is the entire collar business. But also, our business is growing and doing great, so I don't think we have any indicators of an impairment.
Well, a full analysis should be considered, but I agree. In your case, it doesn't appear that you have any indicators of impairment. Okay, so the next step is to consider how to account for the right-of-use asset. This requires you to look at ASC 360 guidance and revise the remaining life of the asset from your decision date.
Okay, I think I understand. So since we have 5 years left on the lease and plan a CCU date of 1 year from now, I would amortize the remaining ROU over that 1 year.
That's correct. You can amortize that on the straight line method. Also, don't forget any leasehold assets you may have, such as electric fixtures, landscaping, or lease improvements. These assets would also get reevaluated for their useful life as well.
Oh yeah, we have permanent fixtures in the old facility that are going to have to stay, so we will have to amortize those over that 1 year period as well.
Yep, you got it.
Now, what should we do with our variable expenses for things like taxes or building maintenance that may vary from year to year? Those aren't included in the right-of-use asset.
Under 842, there is no longer consideration for accruing for these under ASC 420. So you would continue to account for these as you always have.
Okay, so we will just continue to expense these each year. Okay, Fitz. Do we also change the lease liability?
Good question. The lease liability will get accounted for across its normal lease term. If the lease has a clause to shorten the term, the value of that liability can only be revalued if you have notified and exercised that abandonment clause with the lessor.
So my intent, internal communication, and plans aren't sufficient?
No, unfortunately not. The lessor would need to be notified of your termination. Until then, you continue to account for the lease liability as you always have. But when you do tell the landlord, you can apply lease modification, which could result in an accounting gain.
Oh, that's interesting. Would that offset against the right-of-use asset amortization?
Yes, assuming the gain generated by the modification is related to the lease impairment or abandonment caused by this event, then that's correct. You would present the gain in the same line as the right-of-use amortization.
Well, great. I sure learned a lot today on lease abandonment. And here, why don't you take a fancy new collar for FIFO for all of his troubles?
Alright folks, thanks so much for watching. Please like, share, comment, and subscribe. And if you can, donate at Patreon. Anything you can give helps to keep the lights on and ensures we can continue to create content. And of course, helps feed FIFO. If you want to contact us about anything you saw in this video, accounting advice, or ideas for future videos, contact us at patreon.com/accountingacademy.
This video is designed to be illustrative and does not represent an official position. We make no representations, warranties, or guarantees and assume no responsibility for the application of this material. Please seek advice from a competent professional if expert assistance is required.